Investing in stocks can be a daunting task, especially when trying to balance risk and reward. Finding stocks that offer high upside potential with limited downside risk is the key to building a successful portfolio. Welcome to my channel. Below, we explore 8 stocks that present a compelling case for investment in 2025, considering financial stability, growth potential, and market trends. 1. Apple Inc. AAPL, why buy Apple? Apple has established itself as one of the most dominant technology companies globally. With a massive customer base, innovative products, and a strong ecosystem, Apple continues to generate significant revenue from iPhones, MacBooks, Apple Watch, and services like iCloud and Apple Music. Growth potential: consistent revenue growth driven by strong brand loyalty and innovation. Expansion into artificial intelligence and augmented reality. Strong buyback programs and dividends provide shareholder value. Risk analysis: market saturation in the smartphone industry. Regulatory scrutiny on antitrust issues. Dependence on supply chains in China. 2. Microsoft Corporation, MSFT, why buy Microsoft? Microsoft has become a leader in cloud computing, software, and artificial intelligence. With Azure, Microsoft 365, and LinkedIn, the company continues to expand into multiple lucrative industries. Growth potential: cloud computing via Azure is growing exponentially. AI integration across products, including Copilot and OpenAI partnerships. Steady growth in gaming with Xbox and Activision Blizzard acquisition. Risk analysis: competition from Amazon Web Services, AWS, and Google Cloud. Regulatory scrutiny on acquisitions. Economic slowdowns affecting corporate software spending. 3. Nvidia Corporation, NVDA, why buy Nvidia? Nvidia dominates the semiconductor industry, especially in GPUs for gaming, AI, and data centers. The increasing demand for AI technology ensures long-term growth. Growth potential: leading provider of AI chips, crucial for future tech developments. Expanding in data centers, gaming, and autonomous vehicles. Partnerships with major tech companies for AI advancements. Risk analysis: high valuation may lead to stock volatility. Supply chain challenges. Competition from AMD and Intel. 4. Johnson & Johnson, J&J, why buy Johnson & Johnson? J&J is a healthcare giant with a diversified portfolio spanning pharmaceuticals, medical devices, and consumer health products. Growth potential: consistent revenue from essential healthcare products. Strong pipeline of new drugs and medical devices. Stable dividend history, making it a great defensive stock. Risk analysis: legal liabilities related to past lawsuits. Regulatory challenges affecting drug approvals. Competition from generic drug manufacturers. 5. Berkshire Hathaway Inc. BRK, why buy Berkshire Hathaway? Warren Buffett's conglomerate is one of the safest investments in the stock market, with holdings in insurance, utilities, railroads, and blue-chip stocks. Growth potential: strong financial discipline with a diversified portfolio. Large cash reserves allow flexibility in market downturns. Consistently outperforms the S&P 500 over the long term. Risk analysis: dependence on Warren Buffett and Charlie Munger's investment strategies. Exposure to market downturns affecting its stock holdings. Lack of significant tech exposure compared to other companies. 6. Tesla Inc. TSLA, why buy Tesla? Tesla is the leader in electric vehicles, EVs, and renewable energy solutions. The company has strong brand recognition and continuous innovation in battery technology. Growth potential: expansion into global markets, including China and Europe. Advancements in autonomous driving technology. Energy storage and solar initiatives adding revenue streams. Risk analysis. High valuation with volatility in stock price. Competition from legacy automakers and new EV startups. Regulatory scrutiny and CEO Elon Musk's unpredictable decisions. 7. Visa Inc. Why buy Visa? Visa dominates the global payments industry, benefiting from the transition to digital transactions and online commerce. Growth potential. Increasing global adoption of digital payments. Expansion into cryptocurrencies and fintech partnerships. Strong cash flow and dividend payments. Risk analysis. Regulatory scrutiny on transaction fees and monopolistic practices. Competition from emerging fintech startups. Global economic downturns affecting consumer spending. 8. Coca-Cola Company, Co. Why buy Coca-Cola? Coca-Cola is a defensive stock with strong brand recognition, stable cash flow, and global market reach. Growth potential. Expanding into healthier beverage options. Strong presence in emerging markets. Reliable dividends, making it a great income stock. Risk analysis. Declining soda consumption in developed markets. Competition from PepsiCo and smaller beverage brands. Currency fluctuations affecting international revenue. These 8 stocks present a mix of stability, growth potential, and long-term value. While no investment is risk-free, these companies have established themselves as industry leaders with promising future prospects. Diversifying across multiple sectors, such as technology, healthcare, finance, and consumer goods, ensures a balanced portfolio with reduced volatility. Investors should always conduct their research, consider risk tolerance, and consult financial advisors before making investment decisions. The stock market can be unpredictable, but with a strategic approach, long-term gains are achievable. Now, I want to hear from you. Which of these side hustles interests you the most? Drop a comment below and let's talk about it. If you found this video helpful, don't forget to smash that like button, thumbs up, hit subscribe, and turn on the notification bell so you never miss out on more tips to make money online. Thanks for watching.